16.2 will deal with our closing entries. And so we'll just kind of have a refresher of what all do we need to close and journalize. So as a corporation, we will have 4 different main groupings for our closing entries. Our first one will be our closing entry for our income statement accounts that have credit balances. So this basically means any revenue and then contra-related cost accounts to those. Our next will be our closing entries for our income statement accounts that have debit balances. So this would include mainly expenses, but also cost contra revenue. Our next closing entry will be to record either our net income or net loss, and this will be in our retained earnings account, and we will be closing it into our income summary. And then we will have our closing entry for our dividends as well. So at the end of our fiscal period, our temporary accounts are closed just to prepare those general ledgers for the next fiscal period. Like we talked about last semester, it's important to kind of know in a year, how much were you paying for insurance or rent or supplies. So that's why we make sure that we close the temporary accounts. And so to close the temporary account, we have to have an amount equal to its balance and record that on the opposite side. So if we had supplies as a debit, then we would need to close it as a credit. So just remember, we're trying to get to 0. So debit minus credit would get you so that there's get to a 0 balance. So our goal is to get all of our temporary account balances to be 0. So where do we find find the amounts we need for these closing entries. We're going to be looking at our worksheet and using our income statement and balance sheet columns, as well as our statement of stockholders' equity. And just like in 15.1, we will simply record all of our closing entries into our general journal. Okay, so our refresher from last semester, starting with our permanent accounts. And these also could be referred to as real accounts. And so our permanent accounts will include our assets, liabilities, and owner's capital accounts. So these are the group of accounts that we will not be getting to a zero balance. So at the end of the fiscal period, whatever our balance is for one of these accounts, that's going to be our beginning balance for the next fiscal period. So if you think about cash as an asset, and if you have $10,000 at the end of one fiscal period, you're not going to get rid of that. You're going to start the next fiscal period with $10,000 as well. Okay, then we also have our temporary accounts, and that's kind of our main focus for this chapter. So temporary accounts are also known as nominal accounts. And so this includes kind of everything else. So we'll be looking at our revenue, cost, expenses, and dividends. Income summary is an account that we will use throughout doing the closing entries, and it is also considered a temporary account. So our income summary, kind of like I just said, it's used to summarize some of our other closing entries. So we're going to use it with our revenue, our cost and expense closings. And then it's important to remember that our income summary does not have a normal balance side like our other accounts. So this should already be in your book of accounts. So if you just want to look at it, or if you want to put it in with your regular notes, that's fine. But this is something we should already have from last semester. So we have our income summary. The debit side should be for our total expenses. And then our credit side would be our revenue. So this would be when our revenue is greater than expenses. And that would mean we have a net income. And then kind of the opposite, if we have a net loss, Still total expenses go on the debit. And in this situation, the expenses are greater than the revenue, therefore our balance would be on the debit. So then what accounts are we looking at for closing with credit balances? So that would include our sales, purchase discount, and purchase returns and allowances. And we will close all three of these accounts into income summary. So this would actually be a 4-line journal entry. Then looking at closing our entries that have debit balances. And so that would include sales discount, sales returns and allowances, all of our expenses, so anything that ends with expense, as well as our cash short and over. These are all closed into income summary as well. So to reduce these balances to zero, the accounts will be credited for the amount of their balances, and income summary would be a debit, and that would be the total. So you'd have to add all of your credits together, and then income summary debit would be the balance for that. Okay, so then our third chunk for closing entries deals with our net income or net loss. And so after all of our closing entries have been made, our income summary account is still going to have a balance. But remember we discussed that it's a temporary account, so therefore we need to get it to zero. And so when journalizing and getting that all equated out, the balance of our income summary will need posted to retained earnings. Our final closing entry is for our dividends. And our dividends account is also closed to retained earnings.